Good afternoon, everyone, and welcome to Stock Market Today. It's Ali, Coram, and Ed Carson here with a look at the market in today's session, Friday, June 23rd, and also a look at how the week unfolded. And Ed, over the last 2 months or so, we've been in this strong market rally, at least for the Nasdaq, and we now have the first down week after 8 weeks up in a row.
Yeah, so I mean, it wasn't a surprise that we had this, and certainly the Nasdaq and S&P and a lot of leading stocks held up pretty well. A lot of things going on, and we'll just have to see how that goes. I want to take a look at 3 stocks that ultimately showed pretty good support: HubSpot, Rockwell Automation, and Google.
All right, we'll take a look at those 3 stocks, but first let's analyze the major indexes. So here's a look at the Nasdaq Composite, down 1% on Friday. We have the S&P 500 down 0.8% today, the Dow down 0.6%, and small caps taking a little bit harder of a hit, down 1.5%. We'll take a look at small caps soon, but Ed, in terms of the Nasdaq here, especially, it seems like this pullback is really orderly, at least as of right now.
Yeah, right now it looks orderly. That could always change, but right now, I mean, don't try to guess what the market's going to do. Let's look at what the market's doing right now. Right now, it's orderly, just dropping below the 10-day line. I mean, honestly, that's a paper mache defense level. I mean, it's still, like today it fell a fair amount, but it did find support just above Thursday's low. I mean, just fractionally, so I didn't go any lower. Really isn't, trying to hold as much as possible. I mean, some of this, there's some tech titans that are really doing well or not giving up any ground. It's still fairly elevated from the 50-day line. I mean, it's not crazy extended, but if we rallied, it wouldn't take much for it to feel pretty extended again. So we could rally from here, but then we might, quickly hit a ceiling again. So ideally, it would continue to pull back or pause, maybe let the 21-day catch up. I mean, you could do that over several days, couple of weeks, let the 10-week line, let the 50-day line catch up to a greater extent, and then maybe it could take off with a lot of buying opportunities. But I mean, we'll have to see. But yeah, it looks pretty healthy so far.
Let's also take a look at the S&P 500 here below its 10-day line. It did undercut Thursday's low, but not by much, a fractional decline. And also, I think key to note how we've seen the declines coming in lighter and lighter volume in recent sessions.
Yeah, that's been nice to see. It certainly hasn't been this frenzy, there hasn't been, and it's coming off lows a little bit. It was nicer earlier, like mid-afternoon, like, hey, it almost looked like we're going to go positive there, but didn't happen. But still, we're not selling off. We're seeing some strength into the close on some of these days.
Right.
We're holding above the August highs. So the S&P is still holding above some key levels. And if it came down to the 21-day line, that would be around those levels. I mean, the 21-day line's a moving target, but that would be another natural area where it would find support.
Yes. And we want to take a look at the Dow. So here's the DIA ETF. So seeing a little bit more damage in the blue chips and the small caps. So the Dow is now below its 21-day line, trying to find support at the 50-day line. And if you look at where we were on 6/2, that was that really explosive day that we started seeing really broad participation. We've now round tripped that essentially around, maybe the middle of the bar or so on that day. So not giving back everything from before that day, but still eating into it quite a bit this week. And then here's a look at IWM. So continuing to see losses pile up here, and today's outsized decline puts it below the 21-day line and right at the 200-day line. And that coincides with the breakout area that we saw for the Russell in early June as well.
Yeah, and we're seeing that on other measures. It seems like that market breadth, which was looking so strong, not so much. A couple of days ago, there was a day when the Nasdaq fell more than the rest of the market, and the other indexes are going, hey, this is great. The other indexes can hold up, and the Nasdaq, will pull back to be less extended. But that's not what's happened ultimately for this week. Something to watch. If we see the Dow and the Russell and some other measures fall any further, that'd be a little bit concerning. So while the Nasdaq and S&P look good, there was a little less so elsewhere.
Yeah, and speaking of market breadth, let's take a look at QQQ versus QQEW, the equal weighted version of the Nasdaq 100 ETF. So the Qs down 1% on Friday, QQEW down 1.2%, so an outsized decline there for the week. QQEW down 2.8%, whereas the Qs were down just 1.5%. So it really does seem like these mega cap tech stocks that have been leading in the 2023 market are holding up the best in this pullback.
Yeah, I mean, there's some other leaders that are holding up, but definitely those mega caps, it is very concentrated. So even, and the Nasdaq one, the QQEW, these are 100 big cap
Right.
stocks. We're not talking about some small fries. There's some big names in there. And, but it really is, sort of seeing that concentration about what's holding up the best.
Yes. And let's look at SPY versus RSP. SPY for the week down 1.4%, and its equal weighted counterpart, RSP, down 2.7% for the week. Let's take a closer look on the daily chart here for RSP. We had a trend line drawn 6-2 again, that key day where we started to see broad participation. We've now eaten into a lot of those gains and now below the 21-day line here. And this week also, we went below the mid-April levels as well.
Yeah, and just thinking about the relative strength line, that's the blue line sort of down below there. That's the lowest since I think maybe late 2021. I mean, it just continues to weaken. Again, there was just this momentary blip where you saw, hey, a little outperformance, but it was just so momentary. It's just been in free fall for all that time, and going back all this way, or late 2020 actually. So as you know, that's the weakest. Just shows you that how top heavy the market rally is once again becoming.
Right. And it seems like kind of a double-edged sword, because it's obvious which stocks are the leaders, but a lot of those aren't in position anymore for buys, or maybe they need more time to set up again, or for a good add-on opportunity. And it also, on the other side, it makes it harder to find other stocks that are not only setting up, but are working in this market.
Yeah, it's a tricky market. When hopefully it wouldn't take much for it to be opportunities, but it is difficult right now for sure.
And we want to take a look at some various sectors. Here's the industrial sector. After 3 strong weeks up in a row, taking a little bit of a break, which maybe is not a bad thing, Ed.
No, I mean, a lot of these things, they had run it straight up from the bottom, like XLI had. And so that could be, they were getting extended from the 50-day line. So some of these names, and we're going to look at one later on, where just sort of, if you could hold around the buy point, that would be nice and let some moving averages catch up. And so, yeah, I still think this looks pretty good. And Boeing was one negative for this group beyond.
Yeah.
Yeah, so that one is a big weight in there. I'm not saying that's the only reason, but that's one reason why I had that outside effect. I think a lot of industrials look pretty strong.
Let's also take a look at SMH chip sector for the week, a decline of 3.8%. So a pretty sizable decline, but also you have to put it into the context of where it's been. I mean, it was just a month and a half ago that it was really, really surging from, the 120s, and it's still around 147 and change, this ETF. So, chip stocks getting hit this week, but overall, the leading chip stocks are still holding up.
Yeah, and just in general, we're gonna see which ones are the leaders and which ones are sort of like those second tier or the laggards. It's a little, everybody sort of moves ahead when markets moving up this strongly. Whenever these going vertical, oh, it's like, you don't feel bad if your stock is only going up 5% when another stock is up 8% or 12%, but a little different in a pullback.
Totally. And we want to take a look at the software sector. So here's IGV down almost 3.1% for the week to break a pretty big winning streak. So not all surprising to see it coming back a bit.
No, it's pretty same as the chips.
And if we want to take an even closer microscope, or a magnifying glass at those mega cap tech stocks, we can take a look at an ETF. FNGS is the FANG Plus ETF here, down about 0.5% on Friday. So definitely, as we were saying, these mega cap tech stocks weathering this pullback storm. I guess if you could even call it a storm, it's just like a little I don't know, sprinkle. It's not even really storming too hard in tech land just yet, but they're weathering it very well.
Yeah, that's above the 10-day line. So that looks just great in that field.
Mm-hmm. And now let's take a look at some individual names of interest. Here's HubSpot, HUBS, an enterprise software stock worth watching as it tightens up around some key levels, the 21-day line. We have a round number at 500, a declining tops trend line, Ed. So it seems like for stocks that we want to keep on our watch list that are working on new setups and not taking too big of a hit from a relative strength perspective in this pullback, this seems to fit the bill.
Yeah, it does fit the bill in a lot of things. So yeah, there's a few volume bars in there. So one of them might have been that quadruple witching, and obviously it held the 21-day line, so there was no real big breaks. Yeah, that was a strong day. So even the volume doesn't look bad. It's a 4 weeks tight now. It's that should be having. So if you get above, yeah, you can see you drew a couple of places where you might jump in. I think the question would be if it pops above right now, if if the market seems like it needs to pull back a little more. We saw that a lot of stocks popped out on Thursday, and
Yeah.
then there was MongoDB that held up, but there was a bunch of others that really did not. And so it's just tricky because Hubs is probably not going to power higher absent some kind of news like, oh, look at my guidance, we go up 15%. So just something to keep in mind, but there's definitely some places where you might be entering, and this is definitely one to watch.
Right. Good point. And this goes back to IBD's thoughts on market timing. And in a power trend, strong markets and strong stocks will find support at the 21-day line. And it seems like a lot of times the best buys can be, not always, but can be when you're seeing the market in an ideal spot. So if the Nasdaq still has a ways to go to its 21-day line and a potential test or bounce off of that level, like you said, if HubSpot becomes actionable on Monday and the market pulls back more, that could create a timing issue there.
Yeah.
And next on our list, let's take a look at ticker ROK. This is Rockwell Automation, an industrial stock, Ed. A number of up weeks in a row here and a breakout of a cut base last week, down less than 1% this week in light volume and still hanging in that buy zone.
Yeah, so that's, I think, acting really well. There was probably some, if when it got above the 287 level, as it was sort of breaking, there was probably some early entries in there. There was some decent volume there. Could have done that as an early entry, but this is one reason why you have to be paying attention and keeping a wide net for your watch list. But it got really extended. It's still pretty high up versus the 50-day line, even after pausing for a couple of weeks. So this is really healthy action, holding the buy point. It'd be great. The relative strength line, that wasn't the greatest, but that's because it had a full on base. If this market pulls back and this can hold up, that RS line will continue to trend higher, move towards consolidation highs. I'll also note that the fundamentals are pretty good. I mean, that's not bad. 26% growth. This isn't just some boring kind of thing. It's got some decent numbers in there and really strong growth in the latest quarter. So definitely one to watch here.
Sounds like a plan. And let's also take a look at GOOGL, down for the week, but off lows, down about 1%, light volume. Intra-week, Ed, this was starting to look like, and maybe it still does, look like one of the weaker mega cap techs. It closed below the 21-day line in the middle of the week, reversed higher on Thursday and closed right at the 21-day line on Friday. So I guess just when you thought, oh, Google might be breaking down, it was able to find its footing. But also, I think, instead of just making all or nothing decisions for traders who were buying the stock maybe earlier in May, maybe sell some at the break of the 21-day line, but not everything. So if you're going to try to hold a stock for a big move, you're going to be tested, but making those incremental decisions can help you in that instance.
Yeah, that's a really good point. And one reason I wanted to bring this up is that, yeah, during a pullback, you don't know. There's going to be on a given day, some will not look great, but if you're not in the stock, it's like, that's fine. Okay, I'm watching it. It doesn't look very good right now. And then on Thursday, well, it's looking a little better. And today it's sort of like in between. And we'll see. Maybe Monday it tumbles. Maybe, like, yeah, I could almost flash a buy signal on Monday, which again, if the market's not really great, maybe you don't want to take advantage, but it can really swing. We're at those levels where a lot of stocks and where the indexes might very quickly go from, oh, that looks really good to, oh, that looks really bad. And the thing is, you don't necessarily have to make a lot of decisions right now if you're on the sidelines. And, I mean, been thinking just watch them and then wait to see what ends up coming out. And the ones that hold up well, ultimately, not today necessarily, but ultimately, those are the ones you want to take advantage of.
Great advice there, Ed. All right. So as we turn our attention to next week, what do traders need to be focusing on?
I think it's just generally, you should be looking at these stocks and, I mean, and just looking to see what the winners are. And that's the ones that are the extended winners. And we didn't look at it, but like, the NVIDIAs and others that are just holding up so strong, that would be the one, if those could go back to the 21-day or something, that would be like, wow, that might be a real opportunity. Or these stocks that are holding up, and just be ready for it, like getting those watch lists ready. And, the stocks that you are most interested in might adjust a little bit from day to day, but you want to be ready to go and be ready to jump on buy points early, but not, but I would wait for the market signal. I mean, remember, that's the M is so important. It overwhelms everything. I think when you see pullbacks like this, it reminds people, it's like, oh yeah, the market was up yesterday, all these stocks rose. Oh yeah, the market fell today, all these stocks fell. It's like, yeah, the market really does drive most stocks, and, just wait for those more bullish signals. And then I think there might be a lot of opportunities.
Well said, Ed. All right, everyone, that is it for today and this week, but make sure you're keeping tabs on investors.com for the latest over the weekend, and we'll be back with more on Monday on IBD Live. We'll see you then. Hope everyone has a great weekend.